This is your LMAX exchange technical update for Wednesday, August 16, 2017. Euro dollar. So the euro continues to roll over after stalling out this week on Monday after the market traded up towards the 1850 area. It does appear, as weekly studies show and as we've been highlighting this week, that there's still room for this market to correct lower before it establishes a meaningful higher low and bullish resumption. And so this latest breakdown that we're seeing has room to extend below 1690 area, recent support, opening the door for a move back down towards the 115 area, which coincides with the 50-day moving average. Look for a close below 116.90 on Wednesday to strengthen this outlook and accelerate those declines. Sterling dollar. So cable has accelerated to the downside following this latest break back below 130, and the market looks poised for a retest of that previous resistance now turned support at 127.75. That was the range high that had defined the top of a range for several months after the market had put in a plus 30-year low in October of 2016 at 118.40. And so it makes sense that the market might come back down to test this area. We could even see an overshoot, as is common in FX markets, before the market considers basing out and pushing higher again. Overall, the breakout that we saw back in April above 127.75 suggested that we were seeing a structural shift, a longer-term structural shift, setting up a major base here at 118.40 in 2016 and setting the stage for additional upside over the coming weeks and months. And so any setbacks that we do see in the sessions ahead into the 127 area should ideally be very well supported ahead of 125.90, a low going back to the 21st of June, in favor of fresh upside eventually towards 135. Dollar yen. So dollar yen has broken up in recent trade, with the market being supported ahead of the 2017 low at 108.13, and we've seen a range trade in this market over the past several weeks and months. And so it's possible that this latest bounce that we're seeing could open the door for fresh upside in this market back towards the 114 to 115 area in adherence of this range. At the same time, the downside pressure here still remains intact, and we could just as easily roll over again to complete a move to the bottom of the range and a test of the 2017 low. So a bit of a wait and see in dollar yen right now, but clearly this latest bounce is suggesting that the market could be poised for a more significant range resumption. Again, wait and see. No point in making any moves here in dollar yen just yet. Euro Swiss. Euro Swiss has broken down in recent trades since rallying up to a plus 2-year high, with the market trading up to 115.39. That's the highest levels the market had been at actually since January of 2015, since that historic collapse in Euro Swiss. And so the market was left in some quite extended territory up here, and we're now seeing a correction and consolidation to allow for these extended studies to unwind before the market considers an extension of gains and a bullish resumption through the 115.39 level and up towards major resistance at 120. But again, in the interim, there is risk for setbacks still before the market looks to push higher, with the possibility for setbacks to extend back into the 110 to 112 previous resistance now turned support zone. Aussie dollar. So Aussie dollar continues to show signs of topping out in 2017 after putting in a plus 2-year high at 80.66 several days back. That was back on the 27th of July, and there's room still for the setbacks to extend further, potentially into the 75 to 77 area, before the market considers potentially a bullish resumption and this trend that we've seen in 2017. But right now the pressure is on the downside here in Aussie dollar, and there is risk for deeper setbacks. A break and close back above some recent resistance, which comes in around 79.20, would be required to negate this downside pressure. Dollar CAD. So dollar CAD had recently been consolidating off the bounce that we had seen out from 24.14, 2017 and plus 2-year lows, and this consolidation now has led to fresh upside beyond recent resistance in the 27.50 area, which sets the stage for this next move and a continuation of this correction towards the 130 handle. Initial key resistance comes in at 29.40, the 38.2 fib retracement off of the 2017 high to low move. Kiwi dollar. So Kiwi continues to extend its decline since topping out by its plus 2-year high above 75. That's a major level up here above 75 for this market. And so after the market was quite extended, it was actually quite foreseeable to see this market look to correct out from those levels given the extended studies and the level at 75. And these setbacks have continued with room now for the setbacks to extend towards initial support, which comes in at 72, with a break below there to potentially expose a deeper drop towards the 70 handle. At this point here, we need to see a break and close back above recent resistance at 73.70 about to take the immediate pressure off the downside. SPX 500. The S&P 500 has recently put in another record high, and we did see the market pull back quite sharply through some short-term support around 24.58 ahead of this latest bounce. The market has still been unable to break down below some key support, which comes in at 2400, and a break below that level would be required to force a structural shift, a bearish structural shift. Until then, this consolidation and correction that we've seen is still a consolidation and correction within a major uptrend, and there continues to be risk for a continuation of gains. Gold. So gold is in the process of consolidating recent gains, with the market consolidating just off that 2017 high that was seen several days back in June, but there is risk for this market to break out above that high and head up towards the 2016 peak at 1375. Any setbacks that we do see in gold should be very well supported ahead of 1200, with only a break back below that level to compromise what is now a constructive outlook for this market.